where do we put our money in 2026? Well, if you had listened to our next guest in 2025, you probably would be smiling to the bank by now. So let's see where his eyes and projections are at for 2026. We have joining us now Dr. Ifeanyi Ubah. He's the Chief Investment Officer at VNL Capital Asset Management. It's a pleasure to have you join us again today in the studio.
Thank you for having me.
And, well, you called it right last year, and I'm asking myself, were the indicators that obvious? What informed your predictions last year?
Oh, yes. So at VNL Asset Management, what we believe first is research first. Let me give you a story. It's from Francis Galton. You know, he was the person that invented the regression analysis. And the regression analysis has a predictive power. What he did was that in a prize-winning bowl competition, it's our modern-day football competition. He asked, what is the weight of the prize-winning bowl? So it's like asking what's the height of Ronaldo to everybody in the stadium. Obviously, you get some absurd answers. Some people might say he's 1 feet, he doesn't know how to play. Some people will say he's 10 feet, that guy looks like a god, you know? But the simple thing is that when he found the weighted average of all the answers, he was exactly correct, off by 0.5%. So that's where the economics today have their confidence interval. So it's the predictive power of the macro scale. If you can get in large enough data and understand what is going on the macro level, not be concerned about the infinitesimal noise, you will actually be a very good predictor.
Okay, so the noise.
Yeah.
Trump made a lot of the noise. He's still making a lot of noise. He made a lot of noise last year. And I remember at the beginning of the year, Bitcoin was on everybody's mind. You know, the regulation was being put in place. He was speaking on Bitcoin, crypto publicly, and everybody thought it would be Bitcoin. But look at how that panned out.
Well, I don't think Bitcoin has lost its steam just yet. If we see what is happening is the infrastructural pulls. And people that have been holding Bitcoin since the inception are taking their profit. Imagine buying Bitcoin for $1 and you're seeing it at 120. And imagine if you have a massive collection. If you could have sold any other time, you might have not found enough liquidity to exit your strategy. But given the massive institutional inflow of money, this is a perfect time for people that have been what I call Bitcoin OGs to actually take an exit. And one thing we should understand, like I said, is to look at the historicals. Bitcoin is an asset class that historically declines 60% time after time. So if you're not like comfortable with seeing a drawdown of 60%, you should not be invested in Bitcoin.
It's not for the weak.
Exactly. The volatility in that asset class makes it peculiar. But the truth about it, with the way currencies are heading downwards, the valuation of the dollar, even look at what happened to Iran when the US sanctioned them, we see Bitcoin becoming more and more relevant in our modern day age.
So that's Bitcoin. I want to ask your projections, but I'm not sure I want to know. I'm not strong of heart. I'm not sure our viewers are. Gold and silver, they were the top performing assets last year. Some was it was mostly about safe haven assets. Trump throwing tantrums. He's doing that again this year. Do you see gold and silver also coming out on top in the year 2026?
Yeah, so for silver is more less like, aside from the speculative aspect of it, it's now more important on the industrial aspect. When you look at the AI innovation, you look at solar panels, you can't really get anything without using a kind of silver. Silver is one of the perfect conductors. Although people are still looking for other ways around it, but even your phone, your laptop has a little bit of silver in it. So as technology keeps on demanding more silver, it's showing the relevance and the fact that the major stakeholders on silver, which is China, they are now putting restrictions on their outflow. It shows that the demand is accelerating, but since silver has a finite amount and is very difficult to process, the supply is not catching up. That's why we saw it do almost 165% last year, while gold performed almost 60%. While gold has been on a trajectory because of the shift in global politics, we see central banks buying it massively. And for the first time this year, we saw that in the reserves of central banks, they have more gold than the US dollar, which signals something. signals that this tantrums, like you said, by Donald Trump is leading to a movement and a shift to commodities. There's what we call the Bretton Woods 3 conference and convention. And in essence, it just means even if you have the dollar, what can your dollar buy? If you cannot buy wheat, if you cannot buy the shipping route, the commodity is the power. And that's how people are reshifting their investment strategy to make sure commodity is essential in their portfolios, particularly if they are really exposed to dollars. Because if you look at the DXY, the dollar is reducing. If you look at the dollar across currency pairs, the dollar is losing steam. And it's safe to say the Trump move to attack Venezuelan president is less of the oil and more about the dollar. I can tell you about that because
in favor of because there are those who are even saying, is he intentionally making moves to weaken the dollar? Is that what he's doing, or he's defending the dollar? And do you anticipate a weaker dollar this year as well?
Yes. So there's a short-term interest and long-term interest. On the short-term interest, is trying to make the dollar as cheap as possible to increase exports. On the long-term interest, he's trying to re-establish the dominance of the dollar. The Saudi Accord ended where the petrodollar reign is supposed to be over, where Saudi was forced to use the US dollar to settle petrol transactions. Now there is nobody forcing anybody doing anything, but we see people like Venezuela, China looking at alternatives around that, right? Exactly. Now Venezuela participation there has a greater influence rather than just selling their oil to any other person. Immediately, Venezuela can be used as a case study to de-dollarize. In fact, it's a bad signal to the rest of the public. So the move was less about the oil and more about the dollar, in my opinion.
In your opinion, interesting opinions, and I'm sure they're valid to many. Let's come closer to home. Assets at home, and specifically, stocks, the NGX. On the top performers, were they the ones you expected, the likes of NCR Nigeria, Unicel?
So on a sectorial basis, the top performers were actually consumer goods, which, to be honest, was not unexpected. Why? We had the predictions that inflation will move from 33% to around 15%, which was affirmed. That massive drop in inflation and the stabilization of the FX gave room for the increases in initial prices to materialize to something, because they have dollar cost and they have to still increase the prices to match all those flexibilities. Once customers are paying higher, their revenue basket are increasing and valuing. So they actually got a lot of profit by cost minimization, because we've found out that if you look at the books of the industrials, their cost now became very much efficient and maximizing revenue in terms of sales. Yeah,
and we know a lot of them are bouncing back pretty much from
from
depression.
Exactly.
So for this year, consumer goods gonna dominate again, or are you seeing some sort of sectorial rotation?
Yeah, so if I could put my money on any horse, I'll probably look at the financial sector. We are getting closer to the recapitalization move, and I still feel that there are still some upsides, and we have seen recapitalization.
The sector is up significantly. There's still an upside?
Yeah, so the truth about it is that recapitalization to meet the $1 trillion economy is actually moving massively. We have seen recapitalization not only in the banking sector, insurance, and even in the asset management space. These are forcing the big doors to survive and pulling capital where it's supposed to be. That capital is going to flow somewhere. And the financial sector seems to be somewhere that is still looking for opportunity. Remember, the financial sector is more or less like a leading indicator to the growth of the economy, right? And we still project massive growth in this year, possibly 44, even 5% at the end of the year, full year tenure. So we still see some stagnant stocks in the insurance sector that might actually pick up by the time we look at the operational efficiencies. Especially in the tier 1 sector.
Thank you very much for your perspective. No, this is not financial advice. It's just perspective and projection. But it's been interesting picking your thoughts and your direction for 2026. Dr. Ifeanyi Ubah, Chief Investment Officer, VNL Capital Asset Management. Thank you so much for your time on the show today. Yes.